In the previous video, we unveiled the Unga Group Limited as our number 4 best performing company among the listed companies in Kenya over the last 5 years. In today's video, we'll be unveiling the number 3 best performing company over the last 5 years. My name is Pius Mushiri Mugo, the Managing Director of Nabu Capital, and you're watching Invest in Africa. The number 3 best performing company in Kenya among the listed companies over the last 5 years was Kenol Kobil Limited. If you invested 100 shillings in 2013 in Kenol Kobil and reinvested all the dividends until today, you would have had a cumulative portfolio of 233 shillings, which translates to 133% return. Kenol Kobil's share price moved from 9 shillings and 45 cents in 2013 and today is hovering around 19 shillings and 60 cents. That translates to 2.1 times growth in share price. Kenol Kobil is in the business of retailing petroleum products and has 433 fuel stations spread across 7 countries. Now, we were asking ourselves what could have triggered the share price to grow by 133% over a 5-year period that was extremely difficult. And we went to 2011 and 2012 and we noticed that was a very, very difficult year or period for Kenol Kobil. In fact, they made a massive loss of 6 billion, more than 6 billion shillings in 2012. There was also a failed takeover bid by Puma. And also that particular deal occasioned a scandal that may have badly affected the company's reputation. And all that led to the appointment of new leadership in David Ohana, who has been leading the company since. So the new leadership has overseen a successful recovery or turnaround of the company over the last 5-year period. And some of the things that we've been able to see is, for example, the disposal of non-performing assets in Tanzania and the Democratic Republic of Congo, as well as efficient management of working capital. We've also been able to see the impact of the turnaround efforts in the numbers. If you look at the revenues have grown from 110 billion shillings in 2013 to about 159 billion shillings in 2018. And the EBITDA, which is the cash that the business has been able to generate to pay to its shareholders and all other financials of the business, has grown just from shy of 1 billion shillings in 2013 to about 4.5 billion shillings in 2018. The bottom line also has grown much faster than the revenue and has moved from about 558 million shillings to about 2.5 billion shillings over that period. So quite a phenomenal recovery, and that sort of explains why the company has done phenomenally well over the last 5 years, despite very, very tough conditions in the market. Rubis Energy has already acquired about 23.8% stake of Kenol Kobil Limited, and it is looking to acquire the balance of shares to take over full control of the business. If this particular takeover is successful, then it will have implications on potential delisting of this company that has been an important piece for our stock market, and that's not good news for our stock market. However, the investors who are currently invested in Kenol Kobil will definitely laugh all the way to the bank if they are paid 23 shillings per share. It's been a great 5 years for Kenol Kobil over the last 5 years. And the question is, will this momentum continue for the next 5 years? There are a few things that I would recommend that investors be vigilant about. And the top of my list is just this particular deal that, or bid by Rubis Energy from France, will it succeed or will it fail? And if it succeeds, I think it's going to be a good deal for the current investors. They will be laughing all the way to the bank because they'll be bought out at 23 shillings per share, meaning even from where we are today at 19 shillings and 60 cents, there's still further upside. If it fails, and there are reasons probably which could contribute that. Today, I'm aware that the Capital Markets Authority, or the CMA, is investigating on suspicions of insider trading in the recent transaction, especially around this particular deal. What will be their findings? I don't know, but if their findings find that there is any reason to suspect insider trading, then this whole deal could be scattered, or it could be delayed significantly. So, and I think this is what investors are showing in the share price, because today we are trading at 19 shillings and 60 cents, yet everybody knows that the bid is at 23. So this difference is probably explaining the anxiety amongst investors as they make decisions to invest or not to invest in the company. Other than that, I think the company is quite solid, and is likely to continue generating very sound numbers in the future. If the takeover is successful, that could also have another implication to the market, because it would mean that the company will then be delisted, and that will not be very good news for investors going forward. Thank you for watching. I would like to know what you think about Kenol Kobil as the third best performing stock or listed company in Kenya over the last 5 years. Please feel free to engage us on the various social media platforms that are displayed on the screen. You can also write to us on the email address or that is also provided on the screen. You can also call us on the number that is also provided on the screen, or you can come to our offices at International House, 5th floor, and we'll be happy to discuss this further. My name is Pius Moshiri Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa.